Now let's understand what are the 5 different steps for traditional approach of portfolio construction. The very first step is analysis of constraints. So we need to identify what are the constraints for our portfolio selection or portfolio construction, and you're going to analyze all these constraints one by one. First is your income, second is your liquidity, third is your safety of principal. Whenever you're designing your portfolio, you need to make sure that your principal amount is safe. Time horizon, there could be products which are outside your country's boundary, hence there will be a difference in time. So time horizon can be one of the constraints for portfolio construction. Tax consideration, temperament of investors. Now 90% of the market is determined or is basically derived on the basis of psychological factors rather than technical factors. Hence the temperament of investor can actually affect your portfolio. Hence you need to be very much careful in designing a portfolio, and you should take into consideration the psychological factors as well, which is basically the temperament of investor. Step 2 should be determinants of objectives. Exactly what is the objective of your portfolio construction? First is your current income, second is your growth in income, third is your capital appreciation, and fourth is your preservation of capital. That means once you construct a portfolio, definitely you want to minimize the risk, but you also need to make sure that you are having profit and you are having wealth. Profit is your current income and wealth is the income that you are going to receive in future. That would include your growth in income and capital appreciation. Preservation of capital basically talks about the risk, avoidance of risk. Step 3 is selection of portfolio, objective and asset mix. So basis your objective, what should be the asset class that you should be selecting in your portfolio, growth of income and asset mix, capital appreciation and asset mix, safety of principal and asset mix. So basically whatever was your approach or whatever was there in your step 2 in terms of your objectives of a portfolio construction, you need to design your asset mix. That means you need to select your asset class. Inside the asset class also, if you are selecting a particular stock or a particular bond or particular money market instrument, it should basically make sure that it is going to meet your objectives. Step 4 is return and risk analysis. The individual prefers larger to smaller returns from securities. The risks are interest rate risk, purchasing power risk, financial risk and market risk. We have seen all these risks in our previous videos. Step 5 is diversification. Now it is very important to minimize your risk. You need to diversify. So selection of industry. So your portfolio should not be only concentrating on one particular industry. Let's say if you are designing a portfolio, mostly the stocks are from telecom sector. If the telecom sector is not doing well, your portfolio will be actually into a very bad shape. So you need to make sure that there is a diversification, and hence you should have a selection of industries. Selection of companies in the industry. Now since you have identified what are the industry you want to invest upon, you should also make sure that what are the companies that you are going to pick from those industries. Determining the size of participation. Now you cannot give equal weightage to all the asset classes, but you need to put certain weightage to one particular asset class more depending on your objective, what you want to achieve. Do you want to achieve growth, or do you want to make it a balanced portfolio? So basically whatever is your objective, you try to determine the size of participation. This is all about the traditional approach for the construction of a portfolio. Now we will see what are the modern approach. Hence we are going to learn about Markowitz's model in our next video.